European economic data is moving the markets today. That's our topic for today's Backstage Pass. Well, good morning. I hope you're having a good start to your Friday so far. Stocks and bonds are down this morning pretty sharply. Mortgage rates have opened up higher. We'll talk more about that in just a minute, but let's first talk about economic data out of Europe and how that's affecting the markets here at home. In order to get a good perspective on that, we're going to back up to yesterday, and the 10-year yield yesterday got up to about 2.91%, and that was a technical ceiling for it, and came back off of that. So it didn't move past that 2.91% technical ceiling yesterday. Today, that's exactly where the 10-year yield was trading, at that 2.91%, when German inflation data, their version of the CPI here in the United States, German inflation data dropped and immediately spurred a sell-off in bonds in Europe, and that spilled over to the United States domestically here. As soon as the 10-year yield passed that 2.91% ceiling, really gained a lot of momentum as far as a sell-off goes in the bond and treasury markets, and that's exactly what happened. Mortgage bonds this morning are down 48 basis points at the time of recording. The 10-year yield is up 11 basis points today, and it's trading at about 2.99% at the time of recording. Yesterday, the national average for the 30-year fixed was at about 5.49%. We're looking to see that come in today at about 5.75 to 5.8% for the national average for a 30-year fixed mortgage. So that's what's going on in the bond market and with rates today. Now, all things considered, it could have been a lot worse, to be honest with you. The bond could have moved a lot worse. And we've been talking about this pennant formation that bonds have been in, and we were hoping that the breakout of the pennant formation would be to the upside, because that's the direction that everything was trending, but just global economic data wouldn't let that happen. And like I said, all things considered, we do expect the Fed to be watching all of this and watching this data that's coming out. Next week, we actually have PCE data that's coming out it's an inflation metric for us here in the United States a week from today. So obviously the Fed is watching all of this, and we do expect their tightening policy to continue, and we expect that policy to continue to do its work in helping slow down inflation in the coming weeks and months. And so, we expect that to continue. And even though the markets right now are pretty data reactionary, the markets are pretty, reacting very heavily to data, we do expect to see mortgage rates start to decline as that Fed tightening policy really starts to take hold in the economy. Now, we don't have any other news that's due out today, so barring some unforeseen event or whatever, we do expect for mortgage bonds and the bond market to stay kind of where it's at right now, and not really have a lot of movement. So hopefully the rates will stay stable where they're at right now. Maybe a positive move later in the day. We'll just see how the bonds end the day out. But no more data is due out today, so we're expecting things to sit where they are. Like I said, next week we do have PCE data. That's going to be the most closely watched piece of economic data that comes out next week. But there are some other pieces of data that are going to be coming out next week that could have the potential to move the market one way or another. But hey, we'll save that data for next week. For right now, that's all that we have. Hope you have a wonderful Friday, a great weekend. Remember to stay positive, and we'll see you on Monday.